Hey, this is Chris from Stockspot. In this video, I'm going to be giving an update on the performance of our sustainable portfolios over the 12 months to the end of September 2024. Now, it's been a really strong year of performance for those portfolios and all of the underlying assets that they're invested in, with the most conservative of our sustainable portfolios returning 17.3%. That's a sustainable amethyst portfolio, and the most aggressive growth portfolio, the sustainable topaz portfolio, returning an unbelievable 23.1%, which is our best year on record. Now, what drove these returns? Well, it really came from a few places. So first of all, gold had a fantastic year of performance, and all of the portfolios have a 14.8% allocation to gold. Gold was up 32% for the year, which meant that 5% of returns came from gold across all of the portfolios. Next after gold were the two global ETFs in these portfolios. What we saw is that these global sustainable and responsible ETFs are more weighted towards technology and consumer companies, companies like Nvidia in the US and Home Depot. And all of these businesses did really well over the last year, leading to returns of between 22 and 26% for the global ETFs in the sustainable portfolios. Finally, Australian sustainable shares did pretty well as well, with a return of 21.6%, largely driven by financial companies in Australia, which had a much better year than resources. And then government bonds in Australia had a pretty good year as well, up 7.2% on the back of falling interest rate expectations. And so they're the assets that have contributed to the returns. Now, we do have some investors wondering, should I be waiting for a dip to buy or buying now? My view is always, if you want to get invested but are worried about buying at an all-time high after a big market rally, the best strategy really is to dollar cost average, spread those investments out over a period so you don't feel regret of not investing, and you actually get invested over a period and have the opportunity to buy lower if markets have a dip over that time.